Hello there. Today's December 20th, and I would love to talk about the homeownership gap for millennials. Millennials are people born from 1981 to 1996. So I am considered an older millennial, so is my husband. And I do think things do vary widely between older and younger millennials, but nonetheless, we are considered a generation. I do think as technology changes, generations will get shorter, at least in terms of their habits. I think so. I think it's hard to generalize an entire generation, but this data is showing that our generation, millennials, are very much lagging in home ownership rates. If you look at this chart here, the more expensive metropolitan areas like San Diego, San Francisco, and Los Angeles, New York, and Boston, very expensive areas, the home ownership rate among millennials as compared to overall home ownership rates, you can see the gap is even wider. I think San Diego, even though San Francisco is higher cost, San Diego has even more limited inventory, and that's why home ownership rates are even lower there. That's what is explained. So the more affordable metropolitan area is, the home ownership gap is less wide. But nonetheless, millennial home ownership still has a gap, as we can see. This entire publication talks about why, but essentially, millennials are the most educated as well as the most diverse generation in our history of the United States. And with Black and Hispanics having greater barriers, Black and Hispanic have greater barriers to access a mortgage due to, I'm reading right here in the Freddie article, Black Americans have greater student loan debt, while Hispanic Americans have more automobile debt. That affects the debt to income, and as a result, they have greater barriers to being able to get a mortgage. Asian Americans have higher disposable income, but they also tend to live in the more expensive areas in the country. So that's how Asian American, the demographic, is getting impacted as well, in terms of affordability and ability to buy. So I think it's really interesting that 37% of renters believe they need a 20% down payment, which creates a huge barrier. And Freddie in this article is calling for lenders to educate borrowers on, the difference between consumptive debt versus investment debt. And educational debt is considered an investment debt that can help grow your income. So even though people have student loan debt, it's correlated with higher net earnings, so that has a positive impact. Whereas consumptive debt, like getting a nicer automobile, is not correlated with higher earning potential, for example. So consumptive debt is often considered a less ideal form of debt that a consumer can get themselves into. So So essentially, these are the main barriers. I had no idea that the majority of millennials, by the way, in this under 45 population, I'm not saying all millennials, but majority of millennials here in the under 45 population, do you believe that mortgage owners, which is the group with non-zero for any open mortgage item on their credit, is only 22% of the population of credit visible individuals 45 and younger. Only 22% of us have mortgages. The others make up categories of mortgage ready and near mortgage ready. And mortgage ready means they don't have a current mortgage, they're under 45 years old, have a credit score of above 661, have a back-end debt to income ratio not to exceed 25%, which means your debt divided by your income is less than 25%, and have no foreclosures or bankruptcies in the last 84 months, and have no severe delinquency. And near mortgage ready is just the same thing, but credit score of 600 to 660, and then currently not mortgage ready at all is another population. But it's interesting because only 22% and um, the rest are in the other categories. I was shocked to learn that only 22% of our generation or under 45 are mortgage holders. So that was shocking to me because especially older millennials tend to have household formation, and that generally aligns with purchasing, obviously, if they can. But obviously, this article talks about the barriers, right? Our generation is the most educated, but we're also the most debt burdened. And we also have the largest affordability crisis. So there's many factors getting in the way for our generation. So I wanted to share that the analysis of debt held by mortgage-ready consumers, which is consumers that have credit scores of above 660, two-thirds are revolving trade lines, like that's like home equity line of credit or a credit card, for example. More mortgage-ready consumers have automobile debt than student loan debt. And I thought that was interesting, but the unpaid balances for the student loan debt exceeds the unpayment. So here's the thing, people have more automobile debt, but like in sheer number, but the balances of student loan debt of unpaid balance is the highest of any type of loan. So that's how having student debt can negatively impact a student loan borrower, just because the balances are higher. You might go to grad school, take out $100,000, you might get a car loan for $20,000. Getting a degree is much more expensive than getting a car. I'd argue the education, if it helps you get a better career, is a more worthwhile investment from a income perspective. So I know that's data driven. It's not an opinion. That's my opinion, that education's a better investment. It is my opinion, but it's also data driven. And of course, Black consumers have higher student loan debt. Hispanic consumers, like I mentioned, have higher automobile debt. So anyways, this article talks about big areas that lenders can prove upon, which is debunking the myth of the 20% down payment and helping people understand the difference between consumptive debt versus investment debt. Mortgages and investment debt, equity in your home goes up, right? We want things to help us increase the value of our ownership over time. So I just wanted to share this because I do think that how we target, understanding the types of debts consumers tend to hold, issues specific populations face, and how to help them address it in order to go from becoming near mortgage ready to mortgage ready, right? Or essentially near mortgage ready to mortgage ready, or mortgage ready to being able to actually buy. This population of mortgage ready does not actually mean people are psychologically, emotionally ready, or even have the down payment, right? So there's tons of other barriers and factors, even in the mortgage ready categories, that I think lenders, by virtue of addressing and being able to understand and help consumers and borrowers face, the more likely we will help people overcome their barriers, right? So obviously for student loans, getting into a federal loan program that is based on their income. For automobile debt, oh my gosh, I don't even know what solutions out there besides either paying down the automobile or, saving. I don't know, saving for an automobile and in the future, and not taking out debt for it if possible, right? And of course, understanding what credit education is available and how we can help more borrowers based on the barrier that they may have. And I think there's so many specialized programs to help borrowers that the more information and data we understand of our borrower population, the more we can bring targeted resources to help people achieve affordability. I hope this video has been informative. If it has, please consider liking, subscribing to this channel. I am going to talk, I know next week is Christmas, but my next video I'm going to talk about Freddie's new rules around accessory dwelling units and how borrowers can use, so for example, I have a tiny house. I also have what's considered an accessory dwelling unit because it has its own entrance, a mother-in-law suite, and how those, as long as they have separate entrances, are called accessory dwelling units, and how income generated from those can help people actually get a mortgage or use that income to get another mortgage, for example. So I'm pretty excited about that video. That's what I'll be talking about next week. Please stay tuned. I wish you have a great week, and the holidays are upon us, so happy holidays.